when you get in your car, do you put your seatbelt on? Why? Because you might get into an accident. You
So
automatic.
well said.
Automatic. You put it on. And for us, it's like that's the world we live in. We're going to live in the world that when this happens to you, you're going to call me and we're going to walk you through and you're going to be thankful instead of going, what the F, Eddie? Like, I thought you were giving me something that I signed up for.
This is going to be another one of the Risky Assets podcasts, more powered by Greyhawk. Again,
Segments.
Yeah, I think if you see Daniel, it's going to be powered by Greyhawk, usually. We have a couple podcasts that will just be Risky Assets, talking entrepreneurs. Have a couple really interesting ones that you're going to know who they are. So those are exciting. Really looking forward to those. With that said, we wanted to do a series, which we have done on socials, about kind of the do it rights and the do it wrongs, what we see. It's so prevalent. And we talk about it all the time with our clients, but it's like they don't believe us that stuff is done poorly and that agents have a wrong ulterior motive.
A lot of bad brokers out there.
A lot of bad brokers. So we're just going to do a carousel of people. And by the way, right, like all my employees and Daniel, who's a business partner, we have plenty of stories of what we've seen that's been trash work.
Yeah.
And so we're just going to have people come in. We're going to talk about stuff. Daniel and I have a huge coffer worth of what the heck are we looking at scenarios where you can tell the broker didn't care. So I'm going to let you start with one that is, out for a significant brand of what you saw and how we fixed it. So just again, guys, this isn't like some mom and pop shop. Run it by. Go tell them the story.
So about 10 years ago, I was referred a very large client, still one of my largest clients today. And if I said their name on this show, everybody would know who they are. But we can just say they do custom fabrication manufacturing for cars. And they were referred to me because their broker had, first of all, dropped the ball on their billing for one of their accounts. And so they came to us kind of in crisis and needed a situation fixed. And then in looking at their other lines of business, I found that their garage liability was insured with Travelers,
which is a great company, by the way.
Great,
incredible company.
Great insurance company. They have no business or no desire to do custom auto work.
Okay, so let's make some distinctions here. Travelers didn't know.
Correct.
And client doesn't know because they don't know underwriting guidelines, nor should they.
This is a broker trying to earn an account and say, look at how cheap my product is, and I can insure you.
Yeah.
So the client does chopping, welding, paint, exhaust.
Frame on, frame off, sectioning. Yeah. They do a bunch of stuff.
And not always for cars as well.
It's true.
Sometimes for
buses and recreational toys.
Planes. And, and so in looking over that product, we knew, hey, this is cheap, but if you have a claim, this is not going to be insured.
Yeah. So one of the things that we did a social media post on is it's called material misrepresentation. So if you do not tell the insurance company honestly and truthfully what you have and what you do, they can nullify the entire contract. Now, I know for certain, and you know this too, that they didn't lie or hide anything. Right. The agent just went in and said, nope, they just do paint. They just do paint jobs.
Yeah,
Exhaust. That's it. And they definitely do exhaust. They're custom around the chopped frame and section frame. And so it was one of those big reminders, even for you, right? Because you were newer from the State Farm world to the broker world. Like the amount of garbage out there is significant. Is it more money?
Yes.
A hell of a lot more money.
Yes. And that's a lot of the times the biggest hurdle for clients is they're looking at sometimes a very significant price increase. And they're like, why would I do this?
They understood it, which was really cool. And you can tell savvy business owners, which, the Chris Cooley is the Friedling House of the world, obviously very savvy. And they went, hold on. So I just have a piece of paper with my name on it right now.
Right.
And it's really pointless. Like, it's pointless. They're going to catch, the broker for material misrepresentation. And then what do you got to do to get coverage in that scenario?
You got to go through E&O.
You got to sue the broker.
Yeah.
Right. So, and usually if that's happened, something bad has already happened to the client.
Yep.
And then you're like, well, I need to get money out of the broker. He's going to claim ignorance. They're going to fight it. It's going to be a long time before you see any kind of cash from that person. So meanwhile, you're eating the loss.
Yeah. And we've seen bad brokers be creative on this stuff as well, where like they'll insure a commercial building painter as a paint shop, or as we sell paint, in order to try and get
Close
it
enough.
in order to try and get it through the doors
Yeah.
and get it insured and earn a policy.
And
just
honestly,
the
too,
compromises on that are so terrible.
and this is the part people misunderstand. If they also put a quote in front of you that you sign for, they're going to sit there and go, you, client, signed right there.
Right.
So they're going to they're not just going to go, oh yeah, sorry, I lied to you, I messed up. They're going to try and cover themselves.
Right.
So you got to be well aware. Again, this is one of those scenarios where, thank goodness the client didn't have anything bad happen. We were able to come in and solve a problem, but such a significant exposure to the client. One of the things that we both went through, because we tried to help someone locally here, that always sticks out in my mind. There's a local agency out here, but apartments and apartment, insurers have these rules for how old a building could be.
Oh, you're talking about year built.
Built.
Yeah.
Yeah, so if it's past 1980, they all have their different requirements, but at the time, most carriers were like, hey, anything past 1980, we're not doing it.
Right.
The market had really hardened. And our landlord at our commercial building was like, hey, I have this apartment. Can you look at it? Sure. We do these all the time. And I do a lot of apartments. And I go and get quotes. I go and I know I have the best option. Like, I know that market so well. I present it, and he was like, you got blown out of the water. And I remember going, no, something's wrong. Something's off.
Well, we presented a surplus lines quote,
Which is what it should
because
have
the
been.
building was so old.
So old.
Yeah.
Yeah. And I say so old. It's older than the requirements that were out there at the
60s,
time.
I think, right?
I think it was a 80s requirement, and it was a 77
That's
that they
what it
put
was.
on
Yeah,
or
yeah.
something
Yeah,
like
you're
there.
right.
So what the broker ended up doing, client sent me the quote, and I'm just looking, and I'm like, this is a great quote. Wow, I really did get smoked. And then I looked at some of the underwriting data, and it said the building was 1977.
Yep.
And you cannot, well, they put it as 1980, but it was really 1977. And so when I saw that it was 1980, I was like, this is wrong.
Yeah. Well, and we had gone to that carrier and
they
been
declined
declined
it.
for a year built.
Yeah. So, first of all, this is where, like, it's also sometimes a broker. Sometimes it's like, okay, the owner's a little bit more savvy and they understand kind of the game. But I went back to the owner. I was like, hey, like, this is misrepresented. And he went, not my problem.
It's on there,
It's on there,
Yeah.
And I went, ooh, I'm not working with this guy on that. You're like, he knows the game, right? So it's not all feigned ignorance. There's some like, oh, I know. The problem with misrepresentation is if you know.
Yep.
You can't just always pass it off to the broker. So it's a yes and a no issue there. But guys, this is the how do I say this politely? This is the thing with lying, is that if you lie in something, you lie in everything, in my opinion, right? Like, if you're willing to lie about something small, you're definitely going to be willing to lie about something big. You cheat somewhere, you cheat everywhere.
Compromises bleed into everything that you do.
So, Greyhawk has been built on the ethical standards of, like, would I buy it?
Right.
Would I take care of it? If I wrote it for myself, would I buy it? And I would just go, why would I put this massive liability for my client and myself, my entire organization? We don't train to that.
Right.
We train people to walk away in that situation. You've seen it time and time again. Obviously, we culture set. We do it all the time.
Well, not everybody is a fit either.
Yeah.
So it's like, when you want to do insurance the right way and it's going to be priced appropriate to the risk, not everybody wants to do that. So therefore, not everybody is a fit for what we have.
Yeah, and then there's times we can explain co-insurance here, because every property owner, home, landlord, apartment, whatever, like, you need to understand what co-insurance is on top of that. So in a normal world, you just insure things properly. You're all good. You pay your deductible. It gets paid. You move on. Co-insurance is actually designed to be a penalty for doing things wrong. So the example being this building we're in, right? $10 million to replace it. And you go, man, I can't afford $10 million worth of coverage. I'm going to insure it for 7.5. Okay. Co-insurance usually is 90%. Now, what that means is that you have to be within 90% of the value of the building. I have to be at $9 million to get that full amount of coverage.
Correct.
Or do not get penalized.
Right.
So even if you were at $9 million, you'd still be $1 million short, but you wouldn't get penalized further.
Well, and if you can, explain the difference, because most people are used to co-insurance from health insurance.
Yeah. Okay.
So maybe explain the difference there so that everybody understands.
Big difference between health insurance and P&C. Okay, property casualty. Health insurance, co-insurance is a shared cost. You are going to share in this cost with me.
Yep.
Sometimes people then go to the P&C world and go, hey, a 90% means I have to pay 10% on my own. It doesn't mean that.
Right.
This is not a cost-sharing measure. This is a slap on the
It's an accuracy measure.
It's an accuracy measure and a big slap on the wrist.
Right.
So in that regard, if you had a claim, your building's on the ground, you had $7.5 million of coverage. You were supposed to have at minimum $9 million.
Yep.
And then they do a formula to penalize you. So you're like, well,
Right.
I'll get 7.5 million.
Nope.
You do not.
Nope.
You get 7.5, what you did over what you should, and then they multiply it out by your loss, which means you'd probably end up with 6.25 million at best.
A big punch in the stomach.
Big punch in the stomach. And then you go, hey, what about my ordinance? What about my this? They start you get
Yeah.
a portion of that. Your rentals.
And to the point of the video that you did yesterday on homeowners insurance, the difference in cost on the premium is not that significant.
It's nominal to the risk.
Exactly.
Now, sometimes you might go, dude, it's $500 a month. Yeah, but you just had a $2.5 million exposure put on your plate.
Exactly.
That doesn't make sense. Plus penalties.
Right.
Which is worse. So people think, oh, it's just not a big deal. It freaking is, especially when it does happen to you and you're in a claim and you're like, oh my gosh, what am I up against, right? So those are just two examples that we have that I know that were very glaring. There's smaller versions of that still can impact the policy. So again, these are from the owners. What we're going to do now is we're going to kind of carousel in, some producers and go, hey, what have you seen? And again, we didn't tell them to talk to us. They're going to come in. They have stories. Yep. We all do. So look out here. We're going to bring Brian Hauser on.
Perfect.
Okay. We did our little seat shuffle. Got Brian on my left. Got business partner Daniel on the right. So Brian's been with us now for over 2 years now.
Yeah, just about.
Yeah. So newer to the industry, but obviously you've been a professional for a long time. When we went through all of the different trainings, there was stuff that we would see that would be a problem that we would train through. But as you've kind of been flying on your own, you've seen a lot of that without me seeing it. So we haven't talked about the examples, but the scenario. What have you seen from work that's been wow, this is really misrepresented, be a big problem? What's the example?
Yeah, I'd say early on I was working on a large commercial property account, and it was for a large property management company. And they had a lot of policies that were being non-renewed by State Farm. We essentially were going to have a shot at quoting a bunch of those properties one after another.
I remember this, yeah.
And, the interesting thing about it is it was a really large opportunity for me. I was really excited about it. I was like, obviously, if we're doing the right thing, that's going to win out. We got into it, and one of the non-starters for them is we have to have habitability no matter what. We were like, great, got a bunch of options. We get those options over to them, and they come back with, oh, those are quoted much higher. And
for context here, especially in Los Angeles, habitability coverage is really hard to come by, really expensive. And what it does is if you get a tenant who says you've wrongfully evicted me, there's mold, there's rodents, there's whatever. Bed bugs. If my house, my habitability, area where I habitate is not clean, sound, it's not loud. There's a bunch of things in Los Angeles specifically, but that is habitability coverage. Tough to get. Yeah. So that's why the context of what we're saying is
and most of the time it's excluded. And
now
so,
it has been,
we put a lot of effort into putting options in front of them that had it specifically.
Yep.
And so when we got back that essentially it was more, the first thing is always, hey, let's make sure we compare them apples to apples, and so we can have a fair kind of comparison there. They weren't really, wanting to do that for whatever reason, but obviously trust is a really large issue for insurance and everything in this sphere. So we essentially said, great, at least tell us the carrier. And so they relayed the carrier over to us.
By the way, that's important because this is my space. I know apartments really, really well.
Right.
So I think when we had the conversation, I was like, just ask who it is. We'll know.
Yeah.
We'll know. And so who was the carrier?
Westchester.
They don't freaking offer habitability coverage. Okay. So I went, time out. And then to triple check, maybe I was like, maybe we got it wrong. So I was like, Brian, you got to call the carrier.
We called everybody.
And they were like, no, dude, not in this state. We don't offer that. So it made us go, what the heck is going on? So I think you were able to extract some more data from them somehow. Did we see their applications or something where we saw?
That was because I went there and essentially just tried to say, hey, obviously I'm trying to act in your best interest. This is the process we go through. And what they showed is what they were providing to the other agent. And for a portfolio with over 120 properties, they hand-filled out every single application themselves, which is mind-boggling that they're willing to do that.
Yeah.
But in this instance, they trusted the other agent more than they trusted me because I was on the outside. And so no matter what I said, I can only do so much. So I just said, look, this is what we know. This is what we have found. We're here to be a resource to you if, anything changes in the future. But there's only so much we can do if there's no trust. And
I mean, Charlie, one of the things that we were just talking about was that one of the biggest hurdles when insurance is done right
can be the cost.
Can be the cost. And so that's what you were running into the wall of, is like, how do I convince these people that this is done wrong and that the additional premium is worth it?
Yeah, we tried to have hey, you basically have a piece of paper. Because in my mind, and again, because I do this all the time, and we've discussed this, I remember that account now that you bring it up, but I was like, okay, either they're misrepresenting the updates to the building, they're misrepresenting the panels. A lot of them had old panels. A lot of the driveways and stuff were very impacted with cracks and potholes. So either you're going, hey, that stuff's all perfect, hunky-dory, no problem, or what we think is more likely is they just went, yeah, you have habitability, all good, when they really didn't.
And Brian, to your credit, I remember you worked so hard on this account.
Oh, came in on Saturday, scanning and everything.
Yeah, you were scanning all the old policy documents in order to get everything uploaded.
Yep. It was a big deal. I was so excited. I mean, look, hey, I still haven't lost hope in it. You never do until you fully get turned away. But
we're eternal optimists too, So
one habitability claim, and they're going to know that they don't have insurance for it.
Right.
That's the sad part.
Just go cut loose a water pipe in there. No, would never do that. But it crosses my mind. But I do remember that. And, we can talk about the efficiency portion of how we do things better with tech and filling out applications. That's not really the issue, but misrepresentation, imagine being at one of their larger locations, something bad really does happen. And then the adjuster who, let's be a little fatalistic, is just looking for one reason to say, we can't cover this.
Right.
So many opportunities for that with those kind of policies. Right?
Absolutely.
So,
and one of the things I constantly am telling people is when they're asking to strip away coverage and I'm advising them to do something that maybe they feel is not needed, I reiterate, I can say whatever you want, but the problem is I know I'm setting you up for failure. And so I can't knowingly walk you into the lion's den and misrepresent you when I know if you have a claim, you're kind of going to be screwed over. And that's going to be my fault in the end. And I can't let that happen. And so if you want it done in that way, I'm probably not the right person for you. And it sucks because obviously you want, to add as many people to your book of business as possible. But in the end, you have to be working with the people that want to do it done right because you don't want to be setting them up for failure.
What do I always say about kind of how I go about that and why I won't do it? Do you remember? I'm sure you will when I say it.
Probably.
I like my life.
Oh, yeah. Yeah.
If you like the way your life goes and you start doing crap like that, you're going to end up in a bunch of lawsuits and you're not going to like that life, because, hey, depositions, let me see your emails, let me see your text message, it's open this up, be stressed out about it. It ruins that time of your life. It's hard. So, it's a better way to live knowing that you can sleep, well at night and not have to worry about that kind of crap.
Right.
And I don't know how those guys sleep at night. It's because and you can't not know. So the exposure to your client, you have to have some kind of real,
cojones, dude.
Yeah, or just just the ability to tamp down the truth in your mind of I know that I did a wrong thing, but
it's not even fudging the truth. It was a bold-faced lie, and it's really surprising because they had obviously the trust of that property manager for whatever reason, past relationship, but that's really dishonoring that relationship big time and setting them up for failure. But you can only do so much.
We let it go. The market is changing now, so hopefully we get another shot. But, it is what it is. At the same time, you're just is this a good client in general? The big numbers made it attractive, so that's always a tough thing. But yeah, man, thanks for giving us that example. As you started talking, I was I remember this account. Yep. But just another example, again, not a mom and pop shop by any means, thousands of units, big accounts. So with a big agency, it was not a small-time agency, a large shop that you would know in the insurance world. So it is pervasive in the industry. Thank you for coming on, giving us that example, and we will bring on the next one.
All right, thank you.
Brian.
All right, so now we're rotating to another producer here. I shouldn't even say producer, partner. Here, Roger Romero.
Howdy, partner.
Yeah,
Hey,
dude.
guys.
Roger's the newest partner. or Rogelio or whatever. Like
Rohanzio.
Rohanzio. He's got some
I'm a
hands
golf
on the
guy now.
course. It's not the other thing. It's golf course. What I wanted to do with you have a lot of experience in the game as well. Roger and I actually started our careers basically at the same time, just different kind of paths, and they got to intersect years ago. But Raj does it very well without kind of the training that I had implemented. You were very much similarly minded, but we were talking about misrepresentation and what we see out in the industry. You've seen a lot of trash.
Working on some right now.
Yeah. So it's just a part of the game. Give us a couple of examples of like what you've seen or what you're working on, and then like what the negative impact can be.
Yeah, I think, as of recently, I'm working on a pretty large industrial park, mixed use of manufacturers, wholesale distributors, warehouses, I think about 12 units or so. And I look at this guy's policy, and the class code is retail.
Heavy industrial.
Very heavy.
Tenants.
Yeah. Like iron workers, fabricators.
Yeah.
It was insane. I had to call the client because I was just like dumbfounded. I was like, this can't be right. And he's like, no, yeah, this is what I wrote last year. So I told him, I was like, hey, listen, like, I just want to let you know, this is the class that is currently on your policy. This is what it should be. This is a clear misrepresentation. And he's like, oh, yeah, well, that's not on me. That's on the broker. And I'm like, yeah, absolutely, 100%. You're correct. But if a claim were to happen, it will get denied. And guess who gets to go to court out of pocket?
Yeah.
And how long that takes to see any type of money or recourse for something.
Meanwhile, your building is on the ground, potentially.
No rent.
Yeah.
No nothing. No insurance company paying you all the rent, like all of that. It's funny. We just talked about that with like, hey, you can go after your broker. It's not that simple.
Yeah, it's not
because they're going to
simple.
defend themselves and go, sorry, you signed. Not my problem. All good.
And the insurance company is going to be like, absolutely not. Like, this is clearly not a retail.
Yeah.
So the insurance company, like, they really don't have any skin in the game at that point. So it's really the client versus the broker.
Yeah.
Exactly. And people think, oh, it's not that big of a deal. It's a huge deal. The insurance companies, if you've given them a reason to deny a claim, will take that little crack in the door and go, we're walking through it.
Yeah.
So that's a big thing. People don't think it's, a huge problem.
Well, the one thing that people forget is that insurance contracts are legal contracts. And they just lose sight of that. They're like, oh, well, it's just an insurance policy. Well,
Contract.
What is an insurance policy at its core? It's a legal contract between you and a carrier. And if
it's like saying it's just a marriage. No, you signed a document. Like,
yeah.
it's serious.
Yeah.
It's more serious than that.
And what you said as well, it's not only like the building is damaged or it's a liability claim, but you're not getting your rental income.
You're not getting your rental income.
And you're forking out money, your own money, for attorneys to battle. And it's just all bad. When I told him that was a whole new perspective for him.
Thankfully, he responded fairly well, I'm assuming.
Yeah, very well, very well. We're working something out now. I mean, his premium's going to go from $20,000 to $40,000, but
which is the correct amount for
absolutely.
the exposure.
Well, and not to mention, you're still potentially, if you have a note still on the property, if it's on the ground, you're not collecting rent, and you're still paying your loan.
Yeah. 100%.
I'm sure you have other examples too.
Yeah. I mean, listen, I think, from a property standpoint, it's pretty clear cut and dry when I see stuff like that. In other cases, luckily I haven't really seen something like so blatantly obvious like this. But I just think from even from a homeowner's perspective, right? Like when you're looking to get insurance and I worked with a high net worth client last year. He just built a brand new house, 10,000 square feet in La Cañada. I was like, hey, this is a minimum $1,250 a square foot to rebuild. You know what it costs, right? And he's like, yeah, I just don't want to pay that for insurance because it was expensive. I mean, it was.
Yeah, but it's also really brushy.
Yeah.
Very
brushy.
Yeah. And
I was like, Mr. Client, like this is all relative to what if something happens, like guess who you're going to be upset with if your house is on the ground, and instead of insuring it for 10 million, we're at 8 million. Like, guess who? That's going to be $2 million out of your pocket while you're probably going to come after me.
And maybe in violation of co-insurance on top of that.
Yeah. So it's just,
the cascading negative effect.
Yeah, there's a lot of just misrepresentation when it comes to property, because that's kind of my thing, that's my bread and butter. But I mean, I feel like if anything, property is the most, significant where you're having this misrepresentation.
100%.
It's such a big exposure when it comes to property.
It's everywhere.
Yeah.
Yeah, man. Well, you got a couple emails from clients after fire said, "Hey, you put me in a great position. Like, what do you say? You saved my ass."
Yeah.
Like, he was so appreciative of that, and that's what you want with people's worst days, is that they're like, "Oh, they had me." Really cool.
The night that he lost his house, we filed the claim, and the carrier just, okay, no questions asked, $20,000 just to get you in a place for that night. For board, food, like just
clothing.
Yeah, clothing. I mean, no questions asked. Okay, give me your Zelle, whatever. Zelle them $20,000 right then and there.
Incredible.
Yeah, it's phenomenal.
Shout out to Safeco.
Yeah,
they
Safeco
also did a great job on top
absolutely.
of that. So we got to shout them out for it. Well, Raj, as always, appreciate you, bro. And we'll
Appreciate
catch
you
the
guys.
next producer with their horror stories.
Awesome.
This is Eddie, who has been on a podcast before. He runs our personal lines department. We're going to have a little bit of a theme on this now that we keep talking. A lot of property. Property seems to be the biggest issue because it's the easiest to misrepresent. But Eddie came in here and was like, yeah, here's some things. And I'm like, yeah, this is a lot of what happens. So, Eddie, from your perspective, you do all of our home stuff. And, man, we just see a lot of stuff there. Like, what are you seeing from the misrepresentation standpoint that is pretty pervasive in the industry?
I mean, there's a lot that we see, and I think the biggest thing that I'm scared for our industry is just obviously the topic's misrepresentation is just the lying, the dishonesty, and I just want to get the business, and and that's not who we are, and that's not what we're about.
Right.
People don't realize how important insurance is until you have to use it. And I know a lot of the podcasts and videos you've made on Instagram talk about that, but I really don't hope. I hope that no one ever has to use insurance, but until you have to, then you realize like what you're paying for and what you're getting yourself into. And it speaks about who we are as just people in general, because we could be making a lot of money and doing things the wrong way.
Yeah, dishonest gain.
And it's just one of those things where it's like, I'm not going to sleep well at night. And so, yeah, I've lost accounts. We've lost accounts to other brokers because we go on a side-by-side comparison on the same exact company. And I look at it and I'm like, that doesn't seem right.
Yep.
And the biggest thing is just the industry's heading towards a direction where they're trying to avoid having claims. And how are they trying to avoid that? Having upgrades on panels, on roof, on plumbing, and your HVAC systems. Why? Those are the leading causes of claims.
100%.
It's not always fires. Even though the big thing that people think about and the industry is known for is fires, it's not always the fires. It's the waters.
Water's the big one, man.
Yeah, the pipe burst is the thing that nobody thinks about.
Slowly.
So what are they doing now? They're saying, hey, we need a water shutoff. And we need to know when the last time you updated your plumbing. When was the last time you updated your HVAC, your panel, your roof, because we don't want to have those leaks.
And we see a lot of brokers not even ask the clients and just put years into there that qualify. And then you're like, ooh, and then, hey, they're going to make you sign
Yeah.
the application that you put it on there.
Yeah.
And then you're in a fight. It's bad.
How many times do you look at an actual document that you're signing that's more than 3 pages long?
It's rare, man.
I mean, honestly.
Yeah, no, it's rare.
Right.
No, it's like my iTunes agreement. I just scroll,
Yeah.
agree,
Your Peacock, your Netflix,
Yeah.
your all of those. You're just like, yeah, whatever. Just give me my movie, give me my show, give me whatever I'm buying.
To that point, that stuff is more inconsequential to your life, where it's like, yeah, this is my home, this is my business. It does have a little bit more consequence. And really, like, what are you going to do to screw up a Netflix subscription,
But you're saying the habits built.
the habits build of just
The habits
scrolling
built
quickly.
of just scrolling.
Exactly.
No.
Scrolling.
I understand.
And especially when most of the clients that we deal with are purchasing. And they have escrow, and they have their lender, and they have their
need it done
realtor, and they
fast.
have so many things coming in they have to sign. And the biggest thing that's sometimes holding up their deal is the home insurance. And we take really an approach of like being educational and going through ins and outs of everything. And we try to cover everything. We don't always do, just because there's so
lot
many
of stuff.
nuances
Yeah.
to an insurance policy, depending on the carrier that we use. but we try to be really upfront about everything. And so when we take that approach and a client understands that our best foot forward is to make sure that they are in the best hands and they understand that they're getting a good product and more importantly, working with honest people. I think that means a lot. And there are brokers out there, and I can name a lot of them, and I won't, but they know who they are. They will lie on things because and here's the sad part too. And it's unfortunate, but it's true. We have people that refer us business, realtors, lenders, that are saying, hey, we need to get this cheap. We need to make this a certain way. And I will say it, I've lost relationships because they see that we're not providing the cheapest option. And that's not what we're about. And other brokers will provide the cheapest option because, like you said, they will lie.
Yeah, it's
about
at the expense of coverage. It's always
it always
at the
is.
expense of coverage.
It always is.
Well, one of our earliest podcasts was with Stephen Johns. And he talked about that candid conversation that you had with him where he was like, hey, can we make this cheaper? And you looked at him and you were like, yeah, well, I could just strip all the coverage out of it and drop the price on the floor. Is that what you want?
Yeah.
Yeah, exactly. Exactly. And the last thing I want to do is be in a courtroom with the plaintiff, which being our insured, and saying, hey, you didn't tell me or I didn't know. No, it's quite the opposite now. People are calling thanking us like, wow, the Safeco client that Roger wrote. And their house completely burned down in Altadena.
Yeah, we just did it for him.
we just did it.
Yeah, I mean, it's an incredible example of work well done.
Yeah. Yeah.
The industry is so easy to get into for insurance. It's very easy to get into. The problem with it is that you're held to somewhat of a legal standard of professionalism of you should know. You should know better. You're the expert. But realistically, you could have a kid who just graduated high school, who's hopped up on Adderall and steroids, who hops in and starts selling home insurance, and you're like, oh, what about even my commercial buildings? And they can get it so wrong, but they have a license to do it.
Yeah.
And so that's part of the issue. Part of me thinks it's good to have a low barrier to entry. The other part of me is make a test that's somewhat difficult. My goodness, but we
definitely.
just have a big stigma issue that is well deserved. Sure. Everyone needs to do it better. Yeah, and that's who we are. We're the do it right guys, and so obviously that's evidenced by how we handle things. And you bought in right away. That's how you like to function. So it wasn't like we were training you on that either.
No.
But a lot of the new guys, they're getting that culture of hey, we do it right. We do it right.
We have to.
Which is important.
Well, and we've said the property market in California has been pretty bad for a number of years now.
Yeah.
The one big benefit to that for us was that it exposed a lot of bad insurance agents.
Yeah.
So when you write a policy on a standard form, if that's a BOP or a package, a lot of carriers will include lines of coverage. You get coverage for glass and shrubs and building ordinance and law and things just built in. Yep. But the agents they don't even understand it. It's just going in as part of the form. So when the water recedes and the property market gets really hard, it reveals who's naked and who doesn't know what they're doing. And so when you have to line item coverage into surplus lines policies, people that know what they're doing, it becomes very evident.
Yeah, and for the general marketplace, right? Surplus lines is a la carte everything. If you don't ask, you don't get. No. Okay, so if hey, I want ordinance or law, great, they'll give it to you. But if you go, where's the habitability? They're like, you didn't ask. That's right. Where is the extended replacement cost? Oh, you didn't ask.
Yeah.
Hey, I wanted to. Where's inflation guard? Where's liability? If it's not on that freaking application, you're not getting it. So that's the part where he's saying, we find out who's naked because it is easy to click a button on a standard carrier and go, just add everything. It's super simple.
Yeah.
You can still get it wrong, but to a lesser degree, it seems like,
It's
which
not
is
as
good.
punitive.
Yeah, it's not as punitive. Whereas in surplus, it is bare bones. It's it's like Olympic gladiator sports. It's just you're out there fighting with nothing on.
Yep.
So anyway, that's why he said it. We do it very well. So we haven't had any issues. If anything, when the market got hard, you could see our expertise rose up to the ceiling, and we were able to write so much business because we knew what we were doing.
Well, one of the benefits that every producer in this shop knows is that when it comes to commercial property or homeowners insurance, between you, me, Roger, and Eddie, those things are on lock.
Yeah.
We know what we're talking about. Eddie and I know personal lines really well. You and Raj know commercial lines really well. And so when it comes to those conversations and a client says, hey, I've got this property, I instantly know we have an ace in the hole and we're going to be able to do this right.
Yeah. You know, I think the biggest difference for me coming from State Farm, working there for 10 years, is like you mentioned, everything's included in that packet.
Yeah.
They do a good job of writing a good policy. So coming here, there was an assumption of like, this is how it is. And the thing about me is like, I never come in to any approach and anything, whether it's sports, parenting, or my job of like, I'm a finished product. I know everything. I'm eager to learn and get better. It's my competitiveness.
Sure.
And I think there was a part of me where I was like, eyes open of like ordinance and law and inflation guard and this and that. And I'm just like, wait, hold on. Wait, what? Like, what are you talking about? I love that though, because I think it challenged me to go, hey, we need to really know what we're selling, because State Farm did a really good job of just going, hey, it's all there. You don't worry about it. We got you covered. And here, like you said, going to the wholesalers, it's like, well, what do you want? It's like a buffet. You don't want that? You don't have to get it.
Yeah.
You can get this instead. And I had to learn to go, hey, client, this is our professional recommendation of what you should have, what I think you would have. And I always say the approach, if this was my house, this is what I would do.
Exactly.
If this was my house, this is what I would do. You don't have to do it. I understand the price isn't where you want, but I have no control over the market. It's crazy right now with all the fires and things like that. It's softening. It's getting a little better. More markets are coming in. Admitted carriers are opening up a little bit. But I think for me, it was it was eye-opening. Like, wow, this is not what I thought it was.
It's so crazy.
And it was a blessing.
It's a big blessing to be able to be on this side and learn. So he came out of State Farm at my previous agency, and I watched him kind of do the big eyes, like, holy crap, there's a lot more to the ocean than I thought there was, you know?
Definitely.
And, you know, we weren't in the same office necessarily, but, you know, we'd be in meetings and you'd be like, wait, that's a thing. Yeah, I remember a lot of those conversations. And then I remember you. And at some point I went to Daniel, I'm like, hey man, he is taking in a lot of data right now. And I can see he's either really frustrated or he's a little overwhelmed. Like, it's hard to go from, I thought I was you were a good agent, but like you thought you knew more than you did. And then to get slapped in the face to go, it's a bigger ocean than I thought.
The first training that I ever received on a stock throughput policy for transporting merchandise across the ocean, I had no idea that was even a thing. I'm sure it was in the licensing for California somewhere, but I had no idea what that policy did. And then when you have somebody who's importing goods from China and selling them over here in California, and you have to write a stock throughput, well, guess what? There's specific divisions of of general agencies that are designed for quoting those things, and it's like,
yeah,
definitely.
There's a lot. Big ocean on our side, but
and I think for me that's the biggest. I wouldn't even say like competition, because I don't even look at like the other brokers that do the misrepresentation. I don't even think that we're competing against them, because it's not apples and to apples, it's apples to oranges. And at the end of the day, look, clients unfortunately will learn the hard way that they ended up saving a few bucks. Right, because it literally comes down to a few bucks when you're talking about the magnitude of the loss of how much you're going to have to pay out of pocket for co-insurance penalties, out of pocket expenses for not having the right coverage. And you know, there's people out there that are savvy and they understand the insurance industry. And I always say this: you know, you live in the world of probability. I live in the world of consequence. You live in the it might not happen to me. When you get in your car, do you put your seatbelt on? Why? Because you might get into an accident. You
so
automatic.
Well said.
Automatic. You put it on. And for us, it's like, that's the world we live in. We're going to live in the world that when this happens to you, you're going to call me and we're going to walk you through and you're going to be thankful, instead of going, what the F, Eddie? Like, I thought you were giving me something that I signed up for. And that's not what we're about.
Mic drop it, dog. Yeah, that was good. That was really well said. Yeah. And it is a world we live in. We see all the time, right? So, Eddie, appreciate you as always, dude. You're doing a great job as always.
Guys.
So, love you. And then, I think we're gonna do one more producer, and then
the themes are all the same.
Yeah, well, you know, I can guarantee you he's probably gonna have roughly the same. It's just something we see all the time. But yeah, we'll bring in Jesse and we'll kind of wrap from there.
All right, man. Thanks, guys.
Come on, man.
Appreciate you, fellas.
All right, I want to introduce Jesse. This is producer number 1 to finish the podcast. You know, Jesse was my first producer hire that we made on January 1st of 2022.
2022.
Yeah,
because we launched October of 21.
Yeah, so. This is like a full-grown tree. You know, it's like
I've bloomed.
We planted it, and it's a full-ass grown tree.
Big boy.
So wanted to pick up a couple things with you. It's funny because you just mentioned one of the scenarios that we worked on together technically that was a big deal. You heard a lot of commercial property. This one is outside of that. So describe the scenario that happened to, we'll just say this account.
Yep. So a client came to us, referred to by one of our other clients, not really happy with the service that they were receiving. Also, the pricing was pretty astronomical, and they were just trying to see what else is out there. We then get into the nitty gritty, finding out what they're doing. They were a chauffeur livery account. But then when we did a deep dive into full operation to really understand the risk, we found out that they do not only livery, but they do the driving school for all their drivers, which is an operation all on its own.
And it was like separate people. So it was random people
Exactly.
that are teaching to drive. Yeah.
And then in addition to that, they were also renting out, I think it was 4 or 5 different charter buses during their off season to like ski resorts.
Yeah.
And that's an operation in its own
And they
as
were
a
doing
rental.
snow plowing at some point. And we were like, dude,
Yeah.
we're all over the place.
And we go, where are the policies for these other operations? And they're like, well, it's with this one carrier. And we're like, you sure about that? And they said, our broker specifically said we are covered for all 3 of these operations. We then go to the carrier that they're currently with and say, hey, do you know about these 3 operations? Not just livery, but the...
We were more sly, so typically we'll go, hey, what do you guys think about snow plowing? You guys like that? Because we don't try and use names. So I think we ended up doing roughly that same thing, and they were like, oh,
Yeah,
no
no
there's
way.
no shot we would ever do driving school and this and that. We're like, oh, okay, cool, never mind. We walked back. We're on the phone with the client. I remember this. He calls me specifically, and he's like, is this covered? I went, no, we don't need to go further. Like, you can talk to the underwriter with your current broker. I would make your current broker put it in writing.
Yeah. Which he did.
He did, which
the
is
broker did, yeah.
crazy. And then sure enough, they somehow got to the underwriter, which is not normal in our business. They cut out, they don't want to work in, they want the intermediary, they want us. And the underwriter was like, no, we don't want that.
Yeah.
And so it was, again, proof that we were telling the truth and whatever. But the broker was full on misrepresenting
100%.
what was happening, wasn't asking the underwriter, wasn't getting it in writing from the underwriter, doing nothing. Just to get the account.
Just slapping that you're covered to the client and not really working or worried about it, which is crazy because it's a pretty decent sized account, large risk.
Huge risk.
And they have claims. So the fact that you're just going to label that and hope for the best is a little alarming.
And just so you guys know, right, buses, they have some big buses. You need, I think, a minimum of $5 million of total liability. And the reason you're like, well, why would I need that? It's because you have 70 people in a bus. Like, if it goes wrong, it goes really wrong.
Yeah.
And if you said, oh, you're covered, and the underwriter and the adjuster figure it out and say, sorry, no coverage, you're now paying for a bunch of hurt and dead people out of your agency, which is crazy.
And should we even comment about how difficult it is to get E&O limits that high?
Most agencies are not taking $5, $6, $10 million like we are. So, yeah, it's hard. You have to be big enough, and they have to be very comfortable with you.
Yep.
So even us, we keep asking. We always ask for the most.
Every
and,
year
like,
I ask for more.
More and more. And like the 10 million thing was hard for us to get to.
Yep.
And so, like it is really difficult and tough. Sure. And thankfully, again, this client, to his credit, was like, I want to do it right. I want to disclose. I want to make sure I'm covered. I like my life. So we were very thankful that the client
went to bat for us.
And he almost made that insurance company give us an appointment and work with them, which was incredible of him. And we've done right by him. We don't lie to him. He loves that. Sure. Which, again, those are the clients we want all day long. I'm sure you have another example because, again, you've been in it for a long time now.
Property, for sure. Just in the HOA and apartment industries, the last 3 years, obviously, hard market. A lot of carriers have strict underwriting guidelines. I'm sure you've talked about it with the panels being the biggest, the biggest roadblock that a lot of our clients run into. It's expensive to replace those electrical panels, but then also it creates an expensive cost on premium for insurance. And something that I've run into probably 4 or 5 times is going to all the markets that we have access to. The client is adamant that they're just not going to change the panels, and we're like, all right, well, that eliminates all these carriers. These are the carriers that we have left. Pricing is what it is, and then come to find out that they got a quote from one of the carriers that would have declined for an electrical panel, and I say, well, I have access to them, and they decline because you have ABC electrical panel manufacturer, and they go, well, this other broker was able to get it, and I remember verbatim for all of them because I ran into this multiple times because people were just trying to cut costs. Yeah, exactly. And I said, if you got a quote, your broker most likely, because the only way you're getting a quote is if you have an updated panel, and you said that you're not willing to change that. So your broker most likely told this carrier, yeah, they updated it. you're going to have an inspection done. Once you bind this, you pay your down payment, you're on the hook for 25% most of the time. They're going to do an inspection. As soon as they find out that you did not update it, you are without coverage. And then we're starting all the way from ground zero.
Yeah.
And it just, I'm trying to save you time and energy. Time is money. And
Let alone if they have a claim in those first 3 months
my
or
gosh.
something, you know?
So let's reverse engineer that conversation.
Yeah.
Client wants to, they want to do it right. And how do you guys help them with the math of, hey, this is what it's going to cost to redo all of your electrical and your panels? Why don't you guys discuss that for the listeners?
Yeah, we have great just referral partners, vendors, electrical contractors that we're a priority for them as far as referrals go. If we say, hey, we have an apartment, we have an HOA, condo association, they jump at it within usually a week, if not sooner, and they'll be able to go get an estimate pretty quickly. Obviously, it still is an expense, but at least they have a ballpark number to go off of. And then we are able to go do our due diligence through the quoting process with the carriers that will accept those newer or are requiring the newer panels. Yeah. And then they have the estimate for the replacement of the panel and in addition to the premium.
Yeah, and one of the things we did was a cost, break-even analysis to go, hey, if you didn't replace it, okay, that's one option. That insurance cost is going to be $30,000. I'm just using an example, right? If you did replace it, it's going to cost you $20,000 to do the replacement, but you're going to save $10,000 a year on your insurance. Instead of 30, it's 20. I'm like, that's a 2-year break-even point. And typically, too, if you have bad panels, they restructure your coverages to not be as good on top of that.
Sure.
And then your building obviously isn't updated. So you're paying more for insurance and less coverage. It doesn't make sense.
Yeah, it's paid on like an actual cash value instead of replacement costs, stuff like that.
So we've kind of gotten around that too.
Well, eventually also at some point they're going to have to replace it. So
and then you're paying more money on insurance.
Exactly.
As well.
So it's just
most carriers, this too. If you get a work order, you're like, you know what, I am going to do this. I'll replace it in the first 90 days.
Yep.
These carriers will take it with a signed work order that it's done in 90 days.
Yep.
It's funny how it works when you say that you're going to remove panels that are known for burning people alive to an insurance company, and you say, "Hey, we're going to remove these and put in new ones." They're actually
they're happy.
They're
like
pretty
that.
open to having those conversations.
It's a great property now. Yeah, I mean, but it's a real risk, and like they don't do it for no reason, right? It's like, hey, why don't we insure nuclear facilities? Well, guess what? They like to combust. So it's the same thing. So we've seen that as a way. And listen, because we're the do it right guys, it typically does look a little bit more expensive, but it's because we're doing it properly. Yeah. But we will give people solid options, and then they're still like glazed over. I don't want to. Like, oh, you're not a good client for us anyway. Yeah, so we're okay with that. But the amount of misrepresentation on that has been wild over the years.
Absolutely.
So I know you probably have more, but it's a common theme, and we just want to make clear, as if it hasn't already, that like we are just not going to put any of our clients in a position to be negatively impacted. There's times where people will say no to like earthquake and flood, and some of the ancillaries will go, that's fine. Like you don't have to take those. But for the most part, we're going to offer you and at least offer you the stuff you should buy, and you're going to make a decision knowingly that you're going without coverage. Yeah. But anyway, all that to say, I appreciate you, dude, as always. And we're going to wrap the podcast here knowing that, like, hey, this has been a good amount of info. Yeah. This is pervasive. If you want Greyhawk to look at your policies, we would love to do that. We'll leave a link below so we can kind of work with you and have contact. We will do it right. At the worst, we'll look it over and tell you you're in a good place and leave it be. But we want to be a resource, and we want to bless other people with that work. So give us a ring, email, reach out, whatever, and we'll be happy to help you.
Thanks, everybody.
Thanks, y'all.
Thanks,
Take
guys.
care.